All right, good morning, everyone out there. Today is October 18th, 2024, and welcome to this week's Stock Analysis Friday. Okay, quick review. Stock Analysis Friday is all about you giving me stocks or ETFs, and I'll look them up and basically give you an opinion based on technical analysis. We use our software, we use all sorts of things to arrive at opinions that we think the market is going to do. So go ahead at any time during the live presentation and type those symbols in. If you're watching the recording, we'll put the winning trades that we find today in the timeline. So be sure to see that as well. All right, let me just quickly go through some administrational items, and then we can jump right in. All right, Gina's giving us a happy Friday here, everybody. And of course, yes, and welcome. Welcome, everyone. All right, so first thing are the risks involved in trading. Like we always say, without risk, there is no opportunity in the markets. But there is risk, and past performance doesn't guarantee future performance. So you need to be trading with money you can afford to risk, called risk capital. Anything that we find today or uncover in the markets that we like for a trade, please run those by your financial advisor or whoever manages your money to be sure they're suitable for you. We don't know your personal situation, they do. So that's why you got to do that kind of thing. In terms of risk control, please make sure you actually know what your risk is on each and every trade. Now, if you need help in that area, all right, we do have some books on that as well. In terms of risk control, if you're a day trader, this is a great place to go ahead and practice and get funded in day trading. They even give you free data. I'm going to quickly put a link up there so you can access that. Use the link because it's going to give you a discount, okay? You don't want to do anything without getting some type of coupon, and there it is in the comments area. All right, books for you. We got money management books. The Art of Trading coming out this year. Brand new book I've just finished, about 580 pages, being published by my publisher at Wiley Trading, so you can check that out. I also published a book a few years back on Elliott Wave Techniques Simplified. That one was published by McGraw-Hill. So these books are available at Amazon. We have our own Amazon page there. So I'll put the link in the bottom of the recording, or you can go to our website and check it out. We also have a lot of great courses there as well. All right, software. We're going to be using some of our proprietary software. Software first came out in 2003. It's been out a long time. It's been an industry standard. It's being used by hedge funds and personal traders on all time frames and all markets. We have people trading, of course, stocks with it, futures, Forex, and day traders. We use it, day trading as well. So you may want to check that out. Again, I'll put a link at the bottom. And then finally, give us a like, subscribe, and a share. All right, so as Gene says, go ahead and type those in, and I will check those out for you. And I'm referring to stocks, that is. So let me put this down and give you a quick run over on the platform. So I'm currently using NinjaTrader right now today. And in NinjaTrader, I've got 3 charts up. Chart on the left is a short-term chart. It's a 60-minute chart. And what that basically means is that every price bar represents an hour. Chart in the center is our daily chart, and every price bar represents a full day. And then on the far right, a weekly chart, our long-term chart, where every price bar represents a full week. So this is a form, or this is actually called multiple time frame analysis. I did a webinar on YouTube on this and the benefits of using this. But basically, you link your charts together. So when you type in a symbol, all 3 charts populate with the same exact market. And therefore, you can look at the different time frames and get a very wide look at whatever you're analyzing. So in this case, this is the Dow Jones Industrial Average. And then also up here is our scanners. I'm not going to be using those today because you're going to be giving me stocks. But in any case, let's just quickly go over the Dow here. All right, so like I said before, the Dow is still in an uptrend, and of course it is. The market ebbs and it flows, goes down to order blocks, can reverse and things of that nature. But very simply, if you draw trend lines, the market is still up. And I know a lot of people were expecting a market crash this summer, and I kept saying, follow the trend. And of course, those in technical analysis did that, and the market kept going up. So you didn't miss any trades. So when the market breaks and it finally corrects, we'll see it. Okay, we'll see it right here in the charts. But until then, you enjoy the ride up, keep your stops in place. Now, with that said, the market is at an all-time high. This market trend that we've been in has been going on since 2009. So it's been going on for quite some time. And we are at a critical target range in the bull market, which means that we should get a reversal at any time, or could get one at any time. So we're kind of at the top, all right? And that reversal, or next leg down, is going to be a big bear market. And I do webinars on, market forecasting. I think I got my next one coming up at some point in December, or November rather. So I do it once a month. So you may want to check that out. If you want a more detailed analysis of the market, I have a subscription base for that as well. All right, so let's see a couple things here. Let's see what we're looking at here. Okay, so first one I want to look at is silver. So let me type that one in. And on silver, we are bullish on that. And the silver market is an ETF in the stock market represented by SLV. Now, ETFs are a great way to take advantage of certain commodities or indexes. For example, gold is GLD. That's also been soaring to the upside. But the target for silver is around 31.89 all the way up to 35.50. Okay, so we're getting close. We're at 29.61. And this is a short-term top. After this, we expect silver to pull back a little bit. But I think that's going to be the clear path of least resistance to the upside into that target area. So keep that in mind. Now, last week, we looked at a stock called GCT, and this was one we really liked. And I got to be honest, folks, we still like it, okay? This is one heading up to, we think, a target based on the PTF of probably up around 45-ish. 45 to 52. The target is actually from there to 52. And we are at 25.93 right now. So we're kind of heading on up, right? So we're on our way. So this is one I do recommend again this week. So I'm going to put that down as one of the ones recommended for this week. So we'll keep an eye on that. All right, let's take a look at SNOW. This is snow, okay? And on snow here, this is one we also looked at last week, but we didn't feel it was quite ready for a trade. So I did want to quickly look at it again. And here it is here. And we still have a red indicator, or PTF we call it, on the short-term time frame, which is going to keep me from going long. So even though I think this is going to be a great long trade, timing is everything. So we're still waiting it out. And I'm glad we did, because in the last week, it has come down from 126 roughly to about, 118. So let's continue to wait this one out and wait for this pullback to complete, okay? So keep that in mind. All right, so now the other one we looked at on the watch list, but I don't think it's quite ready yet, is UNG. And this, of course, is the ETF for natural gas. And, we were hoping that this was a double bottom here. And that means this chart here, double bottom and a move off the bottom. And it certainly started to seem like that. And now it's pulled back, and it's still pulling back. You can see the downtrend very distinctly here on the 60-minute chart. And then, of course, you can see it on all time frames, but especially that one. But now it's threatening the bottom again. So if you're in this, it's going to be a nail biter, because your stop's going to be below the bottom. And certainly it seems like it's on its way down there. So let's see what happens. Things can reverse awful quick. We like UNG for a long trade at some point. We're hoping it's now, but I don't think so. All right. It's still heading down, and I don't want you to go long on this at this time, but we'll keep taking a look at that this week. Maybe one more low before it turns around. Anyway, it's at 12.98. It's been coming down from quite some time. It had a high, believe it or not, back in 2023, just about a year ago, 160. Maybe that was 2022. let's see. Yeah, that was basically in 2022. So what a downtrend that's coming in, right? Unbelievable. All right, so the other one I want to take a look at is USO. And that one, too, is definitely kind of a little bit messy right now. It's been kind of drifting, pulling back. We think the bottom was put in basically back in 2023, and that had a low of around 66.17, and that is heading up to 99 to 125. That's our target on that. So not a bad place to get in because it's pulled back a little bit. It's kind of going sideways a little bit at this particular point, but I think it should break out. You can wait for the breakout if you want, but this is not a bad price to start accumulating that. All right, let's take a look at GBTC, which is the ETF that represents Bitcoin here. All right, so if we take a look at that here, Bitcoin's recovered nicely, and we kind of figured that that was a bottom that was put in back in August. Great opportunity to buy. This was a retracement area for an Elliott Wave 4, and this was a buy range. So if you bought in here, you're probably pretty happy. Also, too, if you're holding this, let's say you bought on this trend up and you're holding this, well, that's fine, too, at this point, because that was probably a 3, a 4, and here's our target of where we think Wave 5 in the Elliott Wave analysis is going. So Wave 5 has a target of 72.56, which takes it above its previous all-time high and takes it up to a high of 92.64. So that's the target for Bitcoin, and not a bad time to accumulate it now because that range is still far enough away to give you a pretty good return, I would certainly say. So definitely keep that in mind for sure. All right, let me check and see if anything is coming in here. Let's take a look. The other one I wanted to take a look at is at Pfizer, PFE. We had looked at this before, and it was in a pennant range, and now it's breaking out of the pennant. So we were kind of waiting for that. It's pulled back a little bit into the pennant. So now if you actually wanted to redraw the pennant, you could and wait for a breakout there. But I have to tell you, we've got a green PTF above the high here in the short-term time frame, which puts it over $30, which should be a breakout from that pennant. So I'm going to put Pfizer down as a buy right now. All right, so that is PFE. I'm liking Pfizer. I certainly would like to recommend that. And my target, short-term target on that is between 36 and 43, but it could even go a little bit higher than that. So I'm liking that one a lot right now for a short-term trade. And in terms of your stop, let's take a look at where a good place for the stop would be to give you plenty of room to try to make the most out of this. And I would say if you can go in now, put your stop a couple ticks below this area here. So let's give it a little room here, and that's going, actually, let's put it down in here. Let's put it a little bit lower. So that's what, 28.14, it's at 29. Maybe I think this might be better, 27.84. So put your stop at 27.84 just in case they run these areas here, order blocks there. Let's put it a little bit lower, okay? So I think that's probably the best place for it. So that's Pfizer, and that is on the buy list today. All right, let's take a look. Stuart, how are you? Nike. Okay, let's take a quick look at Nike here. And Nike, we looked at Nike before, and it's moving off its bottom. We had a little bit of a pullback, but this week now it's starting to recover. So this is looking good, and we're going to put this on the buy list too. I think when we looked at that before, we liked it as well. We might have been waiting for a little bit for that pullback to finish, but I think we did like it. So let's get that on the buy list. The target is a whopping 174 to 239 if you're willing to hold this for a year or so. So that's a big deal. Short term, let's see where we can go short term with this. Probably getting up pretty quickly into the hundreds here, I would say, by the end of the year or early next quarter. And then from there, it should keep going. So Nike is a buy today, okay? So that one is a good one. Let's keep going. We got CVS here. And this one, it's big move down. Okay, so let's hold off on this one. This is not a buy right now. We've got a red PTF on now, the 60-minute chart, so it's still coming down. And we are basically in a couple critical areas coming up. One is this one, and of course the bottom down here. So you've got two areas to keep an eye on. This was a gap down. Now listen, we've had a channel here and a pretty big run up. So now we have a big move down. And I want to do a couple things here because I want to see, to me, this looks like more of a bigger move down, maybe unfolding here. So we got to be a little bit careful here because I think we've had a retracement to this area here. And if that's the case, then if this is a bottom, this has got to hold. But if it's not, then you're going to have a situation probably where you go down under the bottom to around 49 to 38. So that is, you know, a big decline from where it is here. Let's take a look real quick at the long-term chart here. What concerns me about this is that we, you know, if this was an Elliott wave 4, all right, then this, you know, basically maybe a failed 5 or maybe part of a longer term correction. And if so, you've got a double top here. Now, maybe we'll form a double bottom here and go up. But this is, the clarity on this one is not as clear as I'd like it to be to recommend it. So I'm not going to recommend it. Stuart, if you're long on it, I don't know where exactly you got in, but I gave you earlier 2 places probably where you want to put your stop. So I would put it once again, either here or here. All right. And if those get hit, then probably this move down is going to go lower. Okay. So keep that in mind. So that's CVS. RMD. Let's take a look at RMD right now. RMD we looked at last week, and this was one we liked for a longer term trade up to the target of 310 to 421. Getting a little bit of a pullback here, not quite over according to the 60-minute chart. Probably pulling back a little bit more. We're not going to recommend this one right now because we want it to go into this shorter time frame correction area. So that's kind of what we're looking for. We got a red PTF. Now, if this happens to be a bottom, because it did touch it here, then this has got to turn green. So the next big move up, that should turn green if that's the bottom. If it's not the bottom, which I expect it not to be, maybe at this time, we could go back into that target. So I would hold off a little bit on this. Things are a little different than they were before when we had a yellow PTF. So now we have a red one back there, but we do have a green one here. So we are expecting eventually more highs. The question is this little move back here over or not? Now, if you're long in it, I would probably keep it at this point and just get your stop, you know, underneath this area here at 213.33. If that is too far for you, then of course, at this particular point, maybe just get out here and put a possible buy in here if it returns. And if you're out here and it goes back down, then get in again here. So you could kind of bracket that market. So if it does move up, you don't lose it. But at the same time, if it moves down, you benefit from getting out at this price while it is moving possibly into a new low. So it's kind of the best of both worlds without having the exposure. But I'll let you worry about that and how you want to work that at this time. All right, so those are NKE, CVS, RMK, and we like NKE. So nice job on that one, Stuart. All right, let's see what else we got. Anybody else out there? We might have a quick session today. Looks like a lot of people are away today. So I'll give it another little bit of time. I've covered some of the ones I like. Again, cryptos, I think, are going to start to head up from here. So I'm kind of liking the crypto market right now. Doesn't mean it can't have a ebb and flow, but I think it's moving up into that area. All right, let's quickly run over and take a look at the intraday time frames here. and see what's cooking on the NASDAQ and so forth. And when we, day trade, we do some scalping. So we have some type of scalping indicators up there. A little bit of sideways motion on the M&Q right now. So that's kind of heading in that direction. Let's see what we got here. We're also at a key level here, a fair value gap, a bearish one here, possible double top. So we'll have to see how that works out. A lot of traders may be going short at these levels here. So certainly we'll take a look at that. I'll keep this on here. And why don't we call that a wrap for today? I want to thank everybody for coming. And again, so the winners today are GCT, Pfizer, PFE, and Nike, NKE. All right. Oh, Frank is back. Okay, Frank, how are you? Let me look yours up real quick before we call it a day here, and that is VUZI. So VUZI, and you're looking at that for a long trade. Okay, let's see what we got here. Frank, not bad. Okay, what I like about this is we're not buying at the top, we're buying at the bottom, and I have to tell you, I'm liking it. So I'm gonna say good job on this. This is a buy. So glad you came, because this is one where I think we want to recommend. Okay, so that's a buy. Nice job. Okay, VUZI. All right, so the next thing we got to do is, if this is a buy, where is it going? Well, if you want to hold this for a long, long time, one of our indicators on the right-hand side on the long-term chart says it should eventually break above here. And but you're going to have to wait a while. All right, years. All right, but let's see if a short-term opportunity exposes itself, and let's say probably within the next 6 months to a year. Okay, we're looking at probably 282 to 405, and we're at 132. So this is basically a very cheap stock, almost like a penny stock. So pretty affordable for everybody. There's probably no options on it, but there might be, because it was a little higher before. But again, this looks like it's breaking back to the upside. Now, this break to the upside could be a situation where you have a lot of shorts covering. But in any case, the trend now has shifted up, and it could be also attracting people that are interested in value investing, where they want to take advantage of something like this. You always stand the risk on these cheap stocks of them going under. So keep that in mind. Don't bet the farm on those. But this does look like an opportunity as well. All right, so you may want to think about that. Now, if you go into that, you want to put your stop either at the very bottom or just under the closest pyramid on the daily chart. So that would be a low right around 92 cents. Okay, so that's fairly low in terms of where the price is. So, it'd be nice if you could probably do an option on it, but I don't know if they have it. Okay, on this one, you'll have to do the research. We got bullish divergence building in the owl on the weekly chart. So everything's in place here for this to do well. Doesn't mean you can't get a pullback, but this is not a bad area. We do have a little bit of a softening here on the 60-minute chart, but at this particular point, I think the risk to reward on the daily chart makes a trade worthwhile at this point. So we're kind of liking that. All right, anybody else? Going once, going twice, 3 times. All right. Let me go back. Let's go back and quickly take a look at that longer term or shorter term market. Let's see what the NASDAQ is doing. So the NASDAQ is in a bearish fair market value gap area. So probably get a reversal here at some point, but we'll see how it goes. It may go a little higher and take out, I think it'll probably take out the liquidity here. This is a 5-minute chart. So I imagine we have not taken that liquidity out here. So that makes me suspect of a short trade at this point. So I probably put my buy area for this somewhere up in this area here. I think it's got to wash the liquidity out. And when it does that in a fair market value gap, that is a strong signal that it's a good short at that time. So basically, you're kind of trading from the viewpoint of the institutions. That's kind of where they're looking. All right. So as Gene says, give us a like today. I'll leave this here, play a little music. You guys have a great weekend, and we'll see you back here next Friday. Thanks so much, everybody.